Hi there, welcome to Kneppy Invest and welcome to my pursuit of high quality companies that are not listed on the ASX, primarily focused on the NASDAQ, London Stock Exchange, and the Tokyo Stock Exchange. And the company I'll be featuring in today's video is listed on the Tokyo Stock Exchange, and that company is Sanrio, company I've never heard of before. And just by looking at their website, they sell stuff. I'm not sure exactly what stuff, but maybe a retail company. Hello Kitty. So they're the Hello Kitty company. No idea. No idea at this point in time. The whole reason I'm doing this particular video in this video series is to find companies I've never heard of that could be classified as high quality. And the way I do that is by using a screener I developed. And in Fiscal AI, I've called this particular high quality screener Rule of 10 because I'm focusing on revenue growth above 10% over the last 5 years per year, return on invested capital, and operating margins 5-year average above 10%. And if that is satisfied with the company's valuation being above $100 million and excluding mining companies, if those particular filters are satisfied, I would classify this company as being potentially high quality. Now, on the Tokyo Stock Exchange, 124 companies satisfy this filter. And this is the most amount of companies on exchange in the world that satisfy this filter. So you could actually say right now, the greatest amount of high quality companies in the world are on the Tokyo Stock Exchange. Now, that's by not including or combining NASDAQ and the New York Stock Exchange. If you combine those, you probably would say and argue that the greatest amount of high quality companies in the world are in the United States. But on one exchange, it's the Tokyo Stock Exchange. 124. Now, I've already done a few videos on companies within or that are on this exchange, including Keyence, Tokyo Electron Limited, Advantes, which I found fascinating, and LaserTech, another company I found really fascinating. So in today's video, we're looking at Sanrio. Now, in Fiscal AI, it describes Sanrio as specialty retail. Market cap of the company in US dollars is $12.3 billion. And I really was attracted to the revenue growth and also return on invested capital 5-year average. Operating margins in hindsight at 14.2%. I definitely understand why that is fairly low. Maybe not ultra low. If that was below 10%, that would be a concern. But retail, yeah, low margins, low margins. Okay, so let's have a look at what this company does. Is this the Hello Kitty? Now, I've heard of Hello Kitty, have no idea what it is, but I've heard of it. And it does look like maybe some of these are Hello Kitty stuff. So is that all they do? Hello Kitty. Is that all they do? It does sort of looks like it, doesn't it? And you can just buy Hello Kitty stuff. Back to school, sales, stationery, apparel. Does look like most of the stuff is catered towards Hello Kitty people. Hello Kitty times Bruno Mars, Puma, Mad Happy. Oh, this is collabs. Sorry, this is collabs. Characters. Oh, they've got all the characters here. So it's just not Hello Kitty. It's other characters I've never heard of before, like Gudo Tama, Hango Yin, Chocacat, Charmy Kitty. Okay, so this is interesting. So this is a fairly big space, I suppose, in the world. So let's have a look at what or how Fiscal AI describes this company. So Sanrio, together with its subsidiaries, plans, designs, and sells social communication gifts, greeting cards, and books in Japan internationally. Okay, engages in the production sale of videos, DVDs. They don't mention Hello Kitty at all. I'm just going to Google Sanrio just to see what Wikipedia says. Sanrio, here we go. Sanrio. In fact, Wikipedia calls this company a entertainment company. Da, da, da. Designs, licenses, and manufactures products focusing on the kawaii, which is Hawaiian. Kauai. It's a Hawaiian island, isn't it? I think it is. A segment of Japanese popular culture. There you go. Okay. They own the rights to Mr. Men characters and Japanese licensing rights to the Peanuts characters. Their animatronics branch, Kokoro Company, best known for Actroid Android. Okay. They also run several KFC franchises across Tokyo. I am actually thinking Wikipedia is a better sort of a place to go to get more information on a company just by this. Really good information just in the two top paragraphs. I can now say what this company does. So Maybe I should go to Wikipedia from now on. Sorry, home website, and sorry, fiscal AIO, but your description of the company is just a little bit lacking. Okay, now let's have a look to see why this company satisfies my high quality filter. We already know some of the reasons why. So always first look at revenue growth. And what is interesting about revenue growth, just having a look at this. So the last 10 years, 8%. So if my particular screener was looking at the last 10 years, Sanrio would not have satisfied that screener. But this company's revenue has accelerated 8% in the last 10 years, 26.5% over the last 5 years, 41.8% growth in revenue over the last 3 years. So people are liking Hello Kitty more and more. There you go. Or maybe the company is becoming more diverse and that's why they're growing. Earnings per share growth has really accelerated. In fact, over the last 5 years, earnings per share has grown at 162.2%. Now, that could be because of a one-off or maybe a few one-offs 3 or 5 years ago. So I want to have a look at that in a second. But anyway, nice growth in revenue and earnings and looks like it could be accelerating. We'll say could be accelerating. Gross margin 75.8%. Operating margins 35.8%. Now, remember I mentioned operating margins were pretty low. That was a 5-year average. This is a 1-year average, not 1-year average. This is a 1-year sample size. It's just 1 year. And operating margins 35.8%. So right away, we know operating margins have expanded over the last few years. And that sort of probably explains why earnings have grown at a much quicker rate than revenue. Okay, so this company's growing really quickly, seems like. Return equity at 23.5%, return invested capital 20.6%, both above 20% over the last 5 years as an average. Two thumbs up. A little bit of dividends, not a lot. Dividend yield 0.8%. Payout ratio is 27.5%. I probably would prefer that to be a little bit higher. And there's nothing in the P ratio. We don't know how valued this company is at this point in time. So we're just going to have to keep on moving on. They do have a bears and bulls section now. And they just mentioned the Bears are mentioning that the Sanrio character popularity in Japan becomes increasingly volatile due to intense competition. But it seems like the popularity has been increasing recently. Investments in marketing US and Europe are not successful in maintaining the popularity of non-Hello Kitty characters. So potentially the whole success of this company is Hello Kitty. And Sanrio's license partnership with Owlfish in China ends unexpectedly due to geopolitical tensions. The Bulls say non-core characters below the top 10 ranking for each character popularity grow to become successful franchises and re-accelerate sales growth. Whatever. Okay, I'm bored with that section. Okay, let's have a look at the financial history. Oh, I should have done this beforehand. I did this for the last company I did in this series, but not this one. Okay, so this is why sometimes I like to do it beforehand. It does that weird thing where it just... Okay, so let's have a look at the growth in profit and revenue. This is really interesting. So this company was not doing anything between 2016 and 2021. In fact, revenue was dropping. In fact, revenue almost halved from 2016 to 2021. And this company did, in fact, become unprofitable in 2020. No, slightly profitable, and then unprofitable in 2021. But since then, revenue has quadrupled and profit has gone up a fair bit. In fact, what we'll do is we'll get rid of the last 12 months. But even then, yeah, revenue has almost quadrupled and profit has gone up 2 billion%. And I'm just joking when I say that, but it's gone from non-profitability or loss making to a nice little profit. So significant growth in this company in the last 4 years. This could be trends. This could be just trends. I don't know. So that could be one little red flag that this sort of growth won't be able to be sustained. Okay, let's have a look at margins. And we already know that operating margins have increased quite significantly over the last few years. But what about gross profit margins? Oh, even gross profit margins have increased significantly, up to 35.8%. And what the competitors are seeing here is, whoa, look at these margins. I want a piece of that pie. So I definitely understand why some might be saying there could be some competitive pressures. And that is true for every company whose competitors see really nice margins. They want a piece of that pie. And as we pay attention to, oh, that was operating margins. Sorry, this is operating margins. And we already knew this. Nice growth. And gross margins, all that growth. It's growing really nicely. Although it has been really high through time as well. So generally, above 60% between 2016 and 2021, but now up to 76%. So growth in gross margins as well. Okay, now let's have a look at cash flow. So let's see if this company has any what's the word? Any skeletons in the cash flow department. And not surprising, 2020, 2021, fairly weak. And then all of a sudden, an explosion in cash flow the last few years. And I think the main question I have is how sustainable is this growth? And are we going to, is this the top? Is this the top of the Hello Kitty cycle? I have no idea. No idea at this point. Okay, so that's the cash flow. I'm just going to have a quick look at, I don't think we have to, but I'm going to have a quick look at the efficiency metrics, so return on invested capital and return on equity. And I expect this to have been increasing as well. Yes, this is exactly what I expected. They've both gone really high over the last few years, up to about 46% in 2024 or 2025. So no surprise that the 10 or 5-year average is really high. But if we went back a few years, this company would not have popped up on my radar at all. So it's really been the performance in the last few years. But that sort of performance is, in its way, sort of a red flag for this type of company. And the last thing I do is just have a look at some valuation metrics. And even though we didn't have any P ratio in the overview, do we? Oh, this is going to look ugly. I'm not sure P ratio. You're not going to get anything out of this. So according to this, P ratio is currently at 41.5. But yeah, anyway, what I might do is have a look at EV to EBIT, and hopefully we don't have any surprises in this one. Yeah, we do. We're not going to get much information out of any of these because even if you have a look at the free cash flow yield, it was negative at one point. Yeah, it was a negative, but I suppose this is the best looking one. 2.25% right now. It was much higher in 2016, 17, but again, I don't think this company was a company many people looked at. In fact, I'd say back then, if anything, low quality company. So the belief in this company or the thought of this company might have changed recently just based off the growth, but I'm a little bit dubious when it comes to Sanrio. Okay, so let's have a look at the chart for Sanrio. What is the TIG code? TIG code, by the way, is 8136. 8136. Yes. Something I did not realize that TIG codes on the Tokyo Stock Exchange are numbers. Now, if we go back and let's zoom out, if we go back to this period between 2012 and 2022, what is the quality of this company? Just by looking at this chart, what is the quality? Yeah, it's not a high quality company. Definitely not. In fact, the share price of this company fell from 2,100 yen in 2013 down to 400 yen in 2020. That was during the COVID-19 financial panic. So just by looking at this long-term chart, which is a while, we're talking about over 10 years, yeah, you would not look at this chart and go, this is high quality. So if we had a look at this company a few years ago, yeah, this is not a company that would have popped up on my radar. But since then, the share price has just gone bonkers. So obviously the company has done something right in the last few years. Share price has gone nuts. In fact, the share price has gone up 7 to 8-fold in the last 3 or 4 years. And the share price is at a record high, it looks like. In fact, it looks like the share price might have popped up last week. Look at the volume as well. This is the daily chart. Look at the volume. So a really massive increase in volume. So this company is becoming more and more popular just by looking at the volume. So people like a Sanrio. So they're doing something right. Doing something right. So maybe I'm being a little bit too harsh on this company because the chart looks spectacular. Some of the growth in this company over the last few years has been spectacular. But my question is, can they continue this momentum moving forward? Okay, that's all I have for this look at Sanrio. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.